Hey folks, welcome to Wednesday, the 8th of December 2021. Just turning 9:40 here in Dublin. Pretty quiet morning. We've had French non-farm payrolls coming out, 0.4% below forecast 0.5. Christine Lagarde speaking. Not much going on. The Guindos also from the ECB talking about an easing of the interest, the inflation next year. Not much really going on. And on the docket for the day, we're looking at Jolt's job openings, 3 p.m. GMT. And then, of course, our regular Wednesday hit of crude oil DOE at 3:30. Um, really good day for equities yesterday. As you can see, well, actually, let's just get up the NASDAQ here. And as you've probably been aware of this massive push to the upside, really strong stuff from the NASDAQ, getting out the chart calculator. I think we were kind of opening up here in the round and into the close, looking at about 2.89% on the NASDAQ. Lovely excess on the lows here. I know one of the traders in the room had been long from this point and held all through Monday, and indeed got on a pullback yesterday and held that up. So really fantastic and well done to that trader. I think we're holding exceptionally well. 16,376 is here. Looking at what we were seeing yesterday in the pre-market, we were sort of holding into these highs. And something I did say was that these markets tend to kind of, when we have these good mornings, they tend to really not pull back that much at all and then burst, continue on, come the open and tack on more highs. So 16,376 is trading right now. Trading the DAX this morning. The appetite for selling is sparse. Yeah, I have to say, is sparse. Looking at the NASDAQ, we're back into pretty significant level. This has changed to the weekly bars. I'm actually going to switch back. I'll put another level on here for the weekly level high of the 1st of November this year, 16,448. We could even change. I'll change the color on this one, and then we'll go down to the daily bars, and we kind of have a better look, see what's going on in here. Essentially, yeah, I like this area 16,376 is as this sort of high, but on the daily bar, really you got a double top here on the 16,448 and a half, and just a short hop, skip, and a jump from where we are. Also looking at kind of the high back here on the 30th of November. Either which way, look, I think these markets are going up. I do think they're just gotten a bit too far away from average pricing now. I'd prefer to be long from lower, as you would always want to be, and then kind of play for push above. But we may not get a nice little pullback towards the pivot on the NASDAQ before the market opens. It may just want to hit up into the 16,448 and a halves here. So do the buyers beware here. Definitely buyers beware on the SPOOs. Similar activity. Good level up here on the daily 41.1175s, and you see the market's just slowing down just ahead of that level. I don't think I could put on risk on the longs where it is right now. I'd much prefer that pullback 4,669 3/4, which was kind of the high here from the 28th November this year. Now, we sort of had that pullback yesterday, late in the session, 8:30, pulled back to that level, took a bid. So for me, I think we're going to see 47.11s before we see a pullback on 46.69s here. More upside due, all-time highs. Not too far from where we sit right now. From at market to there, it's just 0.97%. I think we could easily be looking at new all-time highs for the end of the week, notwithstanding Omicron headline risk. Really, there's positive stories coming out each day now. Since Sunday, we're getting pretty decent coverage on how Omicron is not really the biggest threat that we think it is. So on the Dow, on the weekly bars here, you see, well, absolutely smashing this trend, which was very important to monitor. Now 35,900s on the upside target. We have essentially, right, this downtrend here on the weekly bars. See that quite clearly from the all-time high, and then the following week to that, we have this downtrend coming in as support in the Asia Pac session. Should provide support through the European session. Hasn't been tested yet. More upside, 35,900s, please. And then I don't know. Are we due a retracement? I don't think so, and I don't think we have the fundamental or the technical reasoning to do it right now. So I think we can easily hold these gains and keep on trucking to the upside. WTI actually now taking a bit of a bid. Really nice activity. So I think we're going higher in oil. I think we're going higher in equities. You're seeing here with oil, I'll probably just nip down onto the weekly bar here. So as I said yesterday, lovely support around the 200 EMA, and technically, boom, up we go. And I think not only 73.98's target upside, which is this very, very old level, but essentially it marked the high, pre-COVID high in the 6th of Jan 2020. It was a level to get into July this year, and the market did come off quite a bit from hitting that level, but we've since traded up through, and now I think it's just formality for us to trade up and actually into new highs on the year on oil. But that's going to play out over probably from now until end of January, early February, I think, into 86, 80s. But that's a big call. So how do we make money on this market now? I hear you ask. Well, we've been finding really good support in this area down here. Obviously, it got flushed out big time, but generally we wanted to be long this area. One of the elite team is on this long, loving it. And I think you got to be on the long. So pull back onto the S1. I'd like to see that put in. I think we could find some support there, and get rallying up through the 73.98s. But for now, it's destination 73.98s. And I don't really see any shorts warranted at that level either. So we might just track this little level here, as well as a potential target, 74.76. That's kind of it, really. Gold, I mean, gold is a toughie. It really is a toughie right now. Looking on the daily, you're finding that support. This is actually weekly. You're finding that support on the 1782 spot 8s. I think we can rally higher. The read was on the shorts yesterday. On this it'll push down, but the market rallied back to 1782 spot 8. Second bite on the short, highly, definitely worth a little gambit there. But it smashed. It's now holding the 1782 spot 8s. Target is going to be R2 today on the upside. You may even get a pullback into the 1782s for the longs and get on up here. So I just don't see this crushing down. I think the landscape for oil or for gold as a risk asset, it's really changing. I think that risk asset picture is more so crypto now. But what does that mean for the future for gold, and how is this going to trade now? You're probably looking at more industrial and commercial buying on gold, as opposed to more kind of hedging and risk allocation and whatnot. That sort of a trade, I think, is slowly dying through this year and probably next year. So I haven't had a decent risk off trade on gold probably for about 18 months now, 2 years. So that's that. Nat gas as well, just to make you aware. Here is the 500 tick volume bar chart of nat gas. We have this big gray area, which is a gap to close. We had the gap down, of course, just on the left hand side of your screen here on Friday's trade into Monday's trade. We did initially attempt to recover, but couldn't do it. No dice. I think yesterday around 4 o'clock we got back to the bottom of the gap. Couldn't hold it. Down we go. And we're now this morning, we pushed up above the R1 into the area, pulled back to R1, took a bid. I'm looking at least a bit of trade up to the R2 today. I mean, we do have this mega trend. I'll show you now on the daily bar on nat gas, the shape of the market. This is it really. So this mega trend goes back to starting 12th or 28th of December 2020 to the low of the 6th of April 2021. And it's generally a nice looking trend that I have to have in my charts, just to be aware of the tops here and any selling that may come in on that trend. But for me, I think we do certainly need to close at least a little bit of this gap this week on nat gas. Of course, the picture fundamentally on nat gas is that bit of sparring really between Sleepy Joe and Vladimir Putin yesterday on a call. Biden threatening a lot of fire and fury basically if the Kremlin invade Ukraine, and then also saying Nord Stream 2 as a project will be shut down if they do invade. And of course, that is going to be a tightening of the supply of nat gas to Europe. It's also going to increase the reliance of European energy markets on the US grades more so than the Russian grades, which we currently enjoy here in Europe. So, never a dull moment, really. But net, I think this is quite bullish, this rhetoric for nat gas, especially this Henry Hub futures contract here. So, do be careful out there if you're looking to short this thing for continuation down, because really the headline and fundamental picture is going bang against you at this moment in time. So, I'd be tuned into pretty much anything Vladimir Putin, Ursula von der Leyen, or Joe Biden are saying on the matter at this time. All right, that is it for me for today's session. We are racing towards Christmas, and a jolly old time it should be. Hopefully, we don't get into new, fresh lockdowns across the UK and Europe between now and then. And all right, please do click to subscribe somewhere here, I think it is. Have a good session, and I'll see you tomorrow. Cheers.